Hi, good evening. How are y'all? I'm double checking, making sure that I am live everywhere else. Okay, definitely live. I can see. Let me just make sure we good. Okay, we good. All right. Hey, how y'all doing? Good evening. My name is Jessica Hudson, and I am the Employee Financial Coach. I am also the CEO of Wealthy Employees. And we are here to help employees maximize their 9 to 5s, okay? Invest their paychecks to build workplace wealth. And tonight, we are going to be talking about the W 4 in particular. Okay. Now we have been on YouTube every day in some capacity. Okay. And if you have not already, you definitely need to go ahead and like and subscribe. Or if you're on Instagram, I know we on Instagram as well. Definitely go ahead and follow and catch up with all of the videos, all of the content that we have put out there. So if you are joining us live, go ahead and drop in the comments you are joining us from. So excited to have y'all here. And I just want to thank y'all for being here. But I'm also excited because with all of everything that we've been doing on YouTube and everything, we have grown our reach and we have reached 100 subscribers as of yesterday. Woo, woo. Wait, hold on. I think I could do little noises. Let me see. Give me 1 second. I think I can clap, y'all. Oh, I think we could clap. Oh, wait. Yeah, we can. Hopefully y'all heard that because that was so funny. Um, anyway, um, yeah, and so with our subscribers, reaching 100, that is a big, huge goal. I know that some people already probably have 100 plus subscribers on their YouTube, but for us to have grown it in such a short time, it has been less than 30 days. I am so grateful and just so thankful for everybody who has seen and deemed our content as useful, and we pray that and want to continue to share out information that you all need and that is relevant. So definitely feel free to reach out, comment, and engage with the post so that we know that this is what you need to see more of. This is what you want to see more of. This is what you want to learn about. And if you want to, you could definitely go to our website, which is right below me, wealthyemployees.com. Go ahead and sign up for our email list where you become a VIP wealthy employee. You get inside knowledge, insider knowledge, insider knowledge, and you get special I want to say you just get special treatment, okay? You know about things before we launch them. You know about you get more insider, like I said, information. You definitely get more interaction. You get free calls with me. So it's you definitely just go ahead and join. Okay, you get to ask your questions. You get to join the community of like-minded people. So go ahead and sign up for the email list as well so that you can stay up to date via email as well about everything that's going on in We. So I wanted to come on here and talk about taxes. One, because we know tax season here. Okay, everybody probably got their W-2s by now. All right, they came in the mail, and if y'all didn't get it, y'all probably reaching out to y'all employers, past employers, trying to figure out where it's at. And so with this time of year, especially working in payroll, one thing that we usually get a lot of questions about is, why do I owe taxes? Or now there's taxes coming out of my paycheck and I don't understand why. Right? And all of this stems from the W-4. So the W-4, and we got a call just literally yesterday. Yeah. Yes. Yeah. Today's Friday. Today Friday. But we literally just got a call yesterday about somebody's W-4, and this was a younger woman. Not sure if this is her first, possibly second job, because she's not too familiar with it. But I understand that even if it is your second, third job, some people are still not comfortable in understanding the W-4 form. And so we had to kind of break it down. And I was like, you know what? I think this would be a good time to kind of go on and just let everybody know in a quick, just a quick little pow chat, a little chat, um, to know how this W-4 works and how it affects your paycheck, right? So the W-4 form is a legal tax document. It's from the IRS. And what it does is based on the election. Sorry, y'all, this tag is just bothering me now. I don't know what the heck is wrong. But anyway, so it is a legal tax document, and it is provided to your employer or employers to be able to deduct the proper amount of federal tax withholding from your paycheck to give to the IRS for taxes, right? And so what happens is, based on the elections that you put on this W-4 form, your employer is able to calculate how much taxes are supposed to come out of your paycheck, how much taxes you owe. Okay. Now, this W-4 form can be changed at any time, at any point in time. Depending on your employer, it may not show on your next paycheck, just depending on how quickly and when you actually submitted it and when they're able to process it and all that other good stuff. If it's electronic, if you got to do a physical one, all that stuff plays into the timing. But essentially, you can change it at any time. Okay. So you can fill out one and give it back to your employer at any time. And so this W-4 form, yes, it is calculating the taxes based on the tax rate that the government has every year, right? So these tax rates, they change every year, and more recently, they are becoming lower or wider. Let's just say they're becoming lower if you're set at the same amount every year. So if your income is not increasing, you will see a decrease in your taxes. Okay, so the same $50,000 that you made last year, and last year, say in 2025, you are not going to, if you did not change your W-4 form, the tax bracket has widened. And so now that same $50,000, now you're going to owe less taxes in this year. Okay, so if your income has not changed, the tax bracket has changed to decrease those taxes on that same amount of income, if that is making sense. Hope I'm making sense. Hope I did not lose y'all. Let me know in the comments. If you are still following, go ahead and drop a follow, okay, or a thumbs up emoji. All right. So, and I don't know why I totally forgot about Instagram, y'all. Sorry. So with this W-4 form, what essentially happens is you select whether you are single, married, married filing jointly, married filing separately, head of household. Those are the status elections that they have. And with those status elections, you're able to, again, it's going to determine how much taxes come out. Now, if you're single, you may not have any dependents, right? So they're more than likely, the tax brackets are set up to take more money from your paycheck because it's just you. You don't have anybody dependent on you, right? Now, this does not say that you don't, because you can enter dependents further down in the form. Okay. But to set the precedence, if you only select single zero, that is going to trigger the higher amount of taxes that is going to come out of your paycheck. Okay. And the reason being is because you don't have anybody dependent on you. So if you never filled out a W-4 form for your employer, more than likely that is the status that you are set at, single zero. And the reason for that is because that is the standard per the IRS. So if you actually have a W-4 form, or if you flip it over, or if you go look on the IRS website and look at the instructions, it literally says if they do not provide anything set them to the default of single zero. So if you don't go in and change it, if it's an electronic process at your employer, you're going to be set to single zero. Okay. Um, so that's one thing, right? They also are asking if you have multiple jobs, and if your spouse or if your spouse works and things like that. Now, all of this has changed because if you were working prior to 2020, then you may have remembered the not the allotments. I don't know why I want to say allotments. I've been working with PTO today. Um, Goodness gracious, y'all. Why is my brain farting? um, Gosh, it's not, I want to say elections, and it's not elections. Allowances. Gosh, why is that word slipping from me, y'all? Yeah, so y'all may have remembered the allowances where you were putting in one or two or three or four, however many allowances you wanted to put in, right? And those were essentially supposed to be taken into consideration, you yourself. So um, if you were filing single, you would claim one allowance for you, and if you had only had one job, you would claim another an allowance. That's what the single zero was supposed to be, or the single with one job was supposed to look like. But a lot of people weren't using it like that. And another thing that was happening was that people were getting taxed more, as like a savings account, if you would. So when they went to file their taxes around this time, they would get a larger refund because they were getting too much taxes taken out during the year. Now, we're going to talk a little bit more about that, but we're going to continue on with the W-4. So they switched up all of that to make it easier so that you are now being correctly deducted based on your statuses that you are selecting. Okay. So that is why in 2020, it's changed completely. Allowances are gone. Now, if you have not changed, if you have worked with the same employer and you have not changed your W-4 since prior to 2020, and you're still in the 2019, there is a whole nother set of tax rates out there that is specifically still operating off of the 2019 or prior to 2020 tax form. Okay. And then there's a whole separate another tax rates for the 2020 and beyond, or the new 2020 form is what we usually call it. So now there's also the same thing has happened in the dependents section. So those allowances where people would, just put 3, 4, 5, however many dependents. Now there is a specific column just for that. Yo, this tag is driving me. There's a specific column just for that where you put in the $2,000 deduction amount for each dependent that you have. So if you have one dependent, you put in 2,000, two dependents, you put in 4,000, XYZ, and you do that in an amount of increments, right? And then you still have the standard if you want to have additional taxes withheld. So if you have, let's just say you are a non-exempt employee. Non-exempt means that you are eligible to earn overtime. Okay, so you are not exempt from overtime. You are non-exempt, meaning you can earn overtime. So at time and a half, not straight overtime, time and a half. That means that you if your paycheck may fluctuate, right? So if you work overtime and all that other stuff, you may have more increase in paychecks. And so if you did have a lower paycheck where your taxes, you were not due any federal tax withholding, then if you entered anything in that additional taxes withheld that you wanted, that amount would still come out. So if, let's just say you put $20 in there, even if your standard paycheck, not your standard paycheck, even if your paycheck calculated to not have any federal withholding in place, if you fill out that additional tax withholding part of $20, the $20 is going to come out. Okay. So Now, what has this done? I want to go back to actually the change between the 2019 and the 2020. What has this actually done to some people's paychecks? Well, the amount and the deductions have actually went down. So people were not being overcharged, like overpaying in taxes, not overcharged, overpaying in taxes, right? And so what actually ended up happening when they went to file, some people were finding out that they owed the IRS at the end of the year. Now, this happens because when you file your federal taxes, this is literally encompassing everything that you got going on. So it's not just what you got paid, it's what you contributed in pre-tax dollars. It's what you are, if you have investment properties, if you have a business, it's including of your spouse, it includes your, student loans, if you have, if your dependents are working, all these things. Like, this is why I can never okay, because first of all, I'm not a tax advisor, so I'm not a CPA. I cannot tell you what to put on this form, and neither can your employer, because you need to actually have an advisor who is able to look at that entire portfolio, your entire portfolio, to tell you what would be best to put on this W-4 form. Okay. And so the reason why some people were owing money when they switched from those two forms is because they, again, weren't considering the whole picture. And so even though they were taking home more money in their paychecks, they weren't accounting for all of the other factors that were playing into their annual tax return. Okay. So if you do want to switch, over and you are on the old tax W-4 form, you want to make sure that you, again, talk to your tax preparer, talk to your tax advisor to see what elections you need to make sure that you account for on that 2020 form so that you don't owe. Okay. Some things, quick tips, just throwing it out there. To lower your tax liability, you can definitely increase your contributions into pre-tax dollars. So, for example, if you have an HSA, if you have a 401k, you want to go ahead and put those pre-tax traditional, or if you have a traditional IRA, you want to contribute those pre-tax dollars into there, because those lower your tax liability. Okay. Just throwing that out there. So in terms of how much do you think is going to come out of your paycheck? Now, the IRS has a ton of information. Okay. Y'all literally just go to irs.gov. There's so much information out there. It's not even funny. And I always say, definitely go to the source, because they're the ones that are regulating this. So if you want to know more about taxes, go on the irs.gov, right? Or talk to somebody who literally has to study and know all of these tax laws every single year, i.e. a CPA or a tax advisor, right? Which is usually a CPA. So if you wanted to do just a high level kind of estimation of how much your taxes are going to be, there is a publication 15T that is out there for anybody, really and truly, for anybody to view on the IRS website. Now, obviously, you can just Google publication 15T and it is going to pop up. And I'm going to show y'all what it looks like. I'm going to get this ready because I'm going to make sure that I'm just showing y'all this so y'all don't judge me for my 50 million tabs that I got open. Okay, so y'all can see, yeah, and y'all can see on vertical mode too. Okay, so this is what this, let me scroll all the way to the top and go back to the top. This is what it looks like, federal income tax withholding methods. And there's obviously the contents, the table of contents here. So it's an introduction. It tells you what it's all about. And then it goes into these different tables and wage bracket methods and things like that for how to calculate your federal withholding income taxes from your paycheck. Okay. So this is for automated payroll systems. As you can see here, automated payroll systems and withholding So this is a percentage method. You don't want to go there. The wage bracket methods are going to, the wage bracket method tables are going to be the easiest way for you to be able to kind of guesstimate and just see and one read as well. So this is the one that we're going to be looking at. And this one, as you can see, they are separated. So like I said, there are different tax rates for whether or not you're on the new W-4 or the old one. So the new one, this is for the new one. It says forms W-4 from 2020 or later, or you have the one from 2019 or earlier. Okay. And then again, just like they have the other percentage methods, they have that as well um, for the payroll system. So for manual payroll systems, again, you're not a payroll system, so you don't need to use that. So what we're going to do, I'm going to go into, I can actually, oh, I don't know if I can do that. It's okay. We're just going to go to the 2020 or later because that's what we want to see. Now this, you can fill this out if you want to. Personally, I mean, you can, I wouldn't. Only because this is a lot of work and we're just estimating. So it's my just 2 cents. I would just rather look at the tables and go from there. Okay, so what this looks like, just high level, it's telling you this is the 2026, so we're in 2026. So this is the wage bracket method, manual payroll system. You're not a payroll system, but it's okay. And it because this is a table, so you can read the table. And this is for the 2020 form or later. Okay. So up here, this is broken down by how frequently you get paid. So whether you get paid weekly, monthly, or semi-monthly, I think they break it down as well. That's what all of this goes through. And then there's the brackets, the yeah, the brackets here. Okay, so you also have this filing status that you have. So if you're married, filing jointly, head of household, single, or married, filing separately. As you're going to see, depending on which one you have, married, filing jointly takes the least amount of taxes, head of household takes the next least. I mean, then more. And then single or married, filing separately has the least amount of tax reduction in it. Okay. So let's just say that you are making, I'm just going to make it simple. And I'm actually going to stay up here. So we're going to look at 500. Okay. 500, y'all. So 500. So if we go across here, we will see that if you make $500 weekly, okay, if you have a standard withholding, it would be 0. Now, if you have this step number 2, which is that box that says that that you have a second job or your spouse is working, and I can't remember all the other stuff, but there's other things. So if you have that box checked, essentially, then instead of it being 0 withholding, you're gonna have $19. And let me zoom in a little bit here. Hopefully that makes it better for y'all. So instead of having $0, you'll have $19. It's the same thing with head of household. Head of household, if you don't have that second box, that step 2 box check, gosh, you would have $4 taken out versus 29. Okay. And then for single or married filing separately, standard withholding is $19 or $39 if you have the step 2 box checked. Okay. So as you can see, this is kind of just giving you a guesstimate. Okay, it's giving you a guesstimate. If this, and this is again this is on a weekly payroll period. Again, they do have more, they have biweekly here. So if we look at biweekly and we look at that same $500 here, you can see that the amounts have changed. So regardless if you have that second box check or not, you're going to have 0 withholding. Why is this? Well, because this is a whole different pay period, right? It's a whole different pay period method. So $500 weekly is $1,000 biweekly. So you can't really look at it like that. You would have to go down here to the $1,000. And as you can see up here, oh yeah, okay, yeah, here. So here, It's changed. Okay. So 0, 37, 6, 57, 37, and 77. Okay. Respectively, married filing jointly, head of household single, married filing separately. Okay. So the wage brackets matter. The pay period matters, dependent on all of those things. And again, if you wanted to get more in detail as to why all of those things change, this is essentially what they're using. So that form in the beginning, if you wanted to go ahead and look at it, you could do it line by line and see all of the things that go into the calculation. And I don't usually recommend that. I just, like I said. Now, when you go to look at your paycheck and it's actually calculated, it's going to possibly be in that range, okay? It may be right on the dollar, it may not be. It's okay. It's just this is just all estimates, okay? And then the same thing, it looks the same exact way for the 2019 form or later. So now, I think I'm done with this. Yeah, I'm done with this. All right. So if you wanted, there we go. All right. So if you wanted to learn more, if you wanted to understand more about how to reduce taxes, what are some things that I can invest in? If you wanted to learn more about, how all of these things affect you, if you wanted to learn more about just becoming a wealthy employee in general, how do I start thinking about this and what does that mean if I take out, y'all, I have not been checking on my Instagram, sorry. If you wanted to learn more about what does this mean for me, and when I take out, if somebody is taking out too much taxes. So if your employer is taking out too much taxes, if you think they are, definitely ask, right? If you think that they're taking out too less taxes, definitely ask. And they'll be able to help you, walk you through a little bit of how those calculations are being, how the withholding is being calculated. But again, this is just kind of a general estimate of what you're looking at when you're reviewing that publication. Another thing, I wanted to talk just a tidbit on getting a refund versus not getting a refund. There's nothing wrong with getting a refund, because I know I went back to that and saying that people were using using the withholding method, the federal withholding method, to get or to have hold out and get a big refund every year. Now, there's not a bad thing with getting a refund, but you have to understand that means the IRS was holding money that you could have been investing. So, and they're holding it for free because they're not giving you any interest for that money that you had there. Okay. So if you had, a $5,000 refund just because, you overpaid in taxes because you wanted to you wanted them to take the most amount of money so that you can, kind of have something to just go invest in once out the year or whatever the case is. You do have to understand that you're not getting any interest. So that's $5,000, or even if it's not $5,000, just to say it's $2,000-$3,000 that you could have been getting throughout the year, that you could have been investing on a consistent basis and getting interest on if you were had it in a savings plan or something like that, on a savings account or something like that. So it's just something to think about. Again, it's not a bad thing. It's just understanding what your goals are and how it is affecting your paycheck and reaching your financial goals. So if you wanted to learn more about how these things, about how all of these things operate, what it is that you need to even be looking at on your paycheck, how to just kind of review, if you have any more questions on how to review the W-4, there is a number right there. You can go ahead and text that number, and I will send you a link to book a call, and you can get your questions answered. A 15-minute call to get your questions answered, or you can send an email to hello@wealthyemployees.com. And then finally, you can also definitely get our Wealthy Employee Playbook, which is the play-by-play, which allows you to see exactly what you need to be doing. How to, first of all, from even starting to set your goals and set your mindset on becoming wealthy, one, and then two, understanding what you actually need to earn in order to achieve those goals, right? And three, how to even understand and what to look at on your paycheck. How do you actually leverage, and what are you supposed to be looking for with your employer? So if you wanted to go ahead and grab that, I have dropped that in the description already. You can go ahead and grab the Wealthy Employees Playbook. Be tuned in. Okay. So if you are not tuned in, if you are not subscribed, go ahead and like and subscribe, because I am almost certain we are going to be doing a giveaway for reaching the 100 subscribers. So definitely go ahead and get tuned in and get subscribed to the channel. And also get onto the email list so that you will be the first to know about the giveaway and any other special prizes that we may be giving away. And yeah, so if y'all have any other questions, like I said, sorry y'all, I'm getting dry. If y'all have any other questions, or if you just want to ask any other financial questions that you may have, get a little bit more clarity, definitely go ahead and text the number below, or email hello@wealthyemployees.com, and I will be sure to reach out, and so that you can book a free 15-minute call with me. Okay. All right. Y'all have a great night. Happy Friday. Enjoy y'all weekend. And I will talk to y'all later. Bye.